What's up guys, and welcome back to my channel. So today I'm back again with another strategy that we're going to be using to trade indices. Okay, so we're going to be scalping what indices using what the strategy depending on the time frame that we'll be using. Okay, so it's a simple strategy that we're going to be using the stochastic oscillator, and the alligator oscillator, right? So if you're new to this channel, like, subscribe and share the content. Okay, so let me show you the settings for these indicators, then we'll jump into the conditions for our entries later. Okay, so as I said, it's two indicators, right? So the first is the alligator, right? So the alligator, jaws period is 15, jaws shift 8, teeth period 9, teeth shift 5, lips period 6, lips shift 3, right? So then method is smooth, apply to median price, right? Then click done, right? And then for the stochastic oscillator, we're going to be using the default settings, right? So it will be 5, 3 and 3, right? Then low high, simple, right? Then click done, right? So if you are done setting up your indicators, it should look something like this. Okay, so now for the conditions that we need to consider before we enter the market, right? So here, so we can use this strategy on the 1 minute or the 5 minutes. That's where I personally use them. Okay, I don't use it on the 15 minute going up, right? So on this strategy, let me share with you the rules, the conditions that you need for you to get an entry, right? So first one, simple, right? So firstly, you want to see all these these moving averages crossing, right? For either for a sell or for a buy, right? After they cross, as in this instant, right? After they crossed, right, they were crossing forward, showing a downtrend, right? So we'll be looking forward for sell opportunities only, right? So we won't be looking forward for any buy opportunities, right? So before you go to the 1 minute time frame, you first have to check what the direction of the market is. So you can do this on the H1 or the M15. Let's go to the H1, right? So right here the H1 is showing it's in a strong downtrend because it's breaking all these lows, right? So it's in a downtrend, right? So when you go to the M15, right, now on the M15 is just the same as the H1. We're breaking these lows, right? All these lows here, right? And obviously on the 5 minute, that's also similar case, right? So when you go to the 1 minute time frame, we're only going to be looking for sale opportunities, right? So let's go to the 1 minute time frame, right? After we have gone to the 1 minute time frame, right, we are looking for when these moving averages cross, right? So here, let me zoom in, right? So here they cross, right? Then after they cross, right, we will be waiting for them to pull back to to these EMAs, right? After they pull back there, right, we'll then look at our stochastic oscillator, right, for entries, right? So here we enter when our stochastic reaches the level 20, right? Level 8 right here, right? This is for a sell. So if the stochastic crosses over at the level 80, we enter our sell, right? So firstly, go to the higher time frame, check the market direction and enter in that direction only, right? So here our EMAs crossed over each other there, right? So we start looking for sell opportunities there. So we enter here, right, which is relative somewhere to this high right there, right? So for your stop loss, you place your stop loss on the previous high, right? So placing our stop loss somewhere in there, right? Then for your take profit, you said that when you have reached your target, or you wait for the stochastic oscillator to cross for a what? For a buy in this region, in the 20 region, right? So that's where you place your stop loss, and after your trade is gone what? Down in blue, you shift your stop loss right here, right? In case something else happens. So you adjust your stop loss to break even, right? And then you hold the trade, right? Because you know that we are in a downtrend, right? So here we are not looking for any trades, because firstly it's consolidating, right? And then here they cross for a buy, right? Our EMA is crossed for a buy, so we won't be looking for any sell opportunities. Then here, when they crossed again, right? Here they crossed again for a sell, right? So we start looking for sell opportunities again, right? And then they pull back here. That's when it reaches the levels 80. We enter our sales, so it's relative to this high and relative to this high, right? So here we'll be placing our stop loss here. The first stop loss is going to be here, right? And then for this one is above this high, right? And when the trade goes down, goes into profit, we adjust our stop loss to to break even, right? Here also have another entry here, which is relative to this high here, right? Place your stop loss there, right? And when it comes back to it, when it goes into profit, you adjust your stop loss to break even, right? So that's what you'll be doing. You can use this. You can do this on the 1 minute and the 5 minute. Let me show you what you'll be doing on the 5 minute time frame, right? So yeah, on the 5 minute time frame, we are going to have fewer entries, right? But the profits will be larger, right? We have more profits on the 5 minute time frame, right? But even if you use the 1 minute time frame only, you get multiple entries that will all be in profit, right? So right here, firstly, we've already checked out our market direction, so it's showing a sell, right? Then our EMA is crossover there, right? Then wait for this pullback, the first pullback, but it didn't reach the level 80 right here, right? So it didn't reach level 80, right? So you wait again, and here there's a pullback, right? And it did not break this EMA, right? And we enter here, right? So that's what you'll be doing. You place your stop loss after entering there. You place your stop loss somewhere in here, right? Above this high, right? Above the previous high, right? Or on the previous high, right? And when the trade is in profit, you shift your stop loss to break even and exit the trade when the stochastic crosses for a buy in here. So this will be around here. Okay, let me remove it. So here we've got our entry somewhere in here, right? Our stop loss is somewhere here, right? And our take profit was here, right? When the stochastic crosses for a buy. So this was some massive pips right there. So that's what you'll be doing, right? So this was in the opposite direction, it was in the opposite direction of the larger time frame market structure, right? But there were many entries right here. The EMA is crossed over here, right? And there were 1, 2 entries. So 1, 2, you could have had your entries, right? So the most important thing is that you get in before the market is already trending, so that you get in when on the pullback, right? So that your stop loss won't be that large, right? Of course, there may be a few losing trades, right? But you just have to keep on working, right? So practice this out on demo before you go live, and then share with me in the comment section what you think about it. Okay, so here we've got our EMA is crossover there, right? And then the pullback, got a pullback. So we've got entries 1, 2 and 3. So let me see what with which size they are relative to. So we enter here, right? Somewhere in here, stop loss above here, right? Then we hold what our trade, right? Then we enter again another entry. We've got another entry here. Place our stop loss here, right? We'll TP when what the stochastic crosses what here below the 20 level, right? So that's what you'll be doing, right? So let me check another pair, then I'll call it what a day, right? Let me check 350. Okay, so firstly go to our what higher time frame, right? Higher time frame is we've got what a breaking market structure here, right? And this side just almost got broken, right? So here we'll be looking forward for buy opportunities only, right? Let's go to the 1 minute time frame. That's where we get what multiple entries, right? So on the 1 minute time frame, right here, let's start from here. Let's zoom in just once, right? So here, let's start from here, right? EM is crossed over here, right? Then we start looking for entries, right? So we've got an entry here, there, entry here relative to what? To this point there, another entry here relative to what? To this point here. Then we'll be placing our stop losses here. For this one, we'll be placing our stop loss here. So let me change the color of this one. Okay, so for this one, we'll be placing our stop loss in here, right? And then for these ones, we'll be placing our stop loss below this one, this previous low here, right? So that's what we'll be doing, guys. So if you like this content, like, subscribe and share. Thank you.